What's up, traders and investors? Welcome back. Nike's about to drop Q1 FY26 results after market close on September 30th, and this could be a spicy one. In the next 12 minutes, I'll run you through what the street expects, what could surprise, and where real short-term trade setups might lurk. This is not a long-term thesis. This is about the earnings release window. Let's hit the runway. What got us here? First, some quick refresher. Nike has been under pressure. In its fiscal Q4, ended May 2025, revenue fell approximately 12% year-over-year, and EPS dropped to just 14 cents. The company leaned heavily into its win now actions: cost-cutting, channel resets, realigning product focus. But headwinds are still real. Tariff pressure. Nike expects up to a $1 billion drag. Elevated discounting and promotional activity, which erode gross margins. Weak demand in non-core lines, overstock in some franchises. On the flip side, catalysts are mounting. The NikeSkims collaboration, just launching, could juice fashion, lifestyle demand. Momentum in running, performance categories, where Nike's strength lies. The upcoming 2026 World Cup, in North America, gives optional upside tailwinds in apparel and AMP. Marketing spend. Also worth noting, retailer sentiment is warming. JD Sports CFO recently affirmed that Nike is doing all the right things. Bottom line, Nike's in turnaround mode, but the stakes are higher now. The earnings release will be a test of execution and credibility. Now, what are the street's expectations? Expectations and downside risks. Here's what consensus sees heading into September 30th. EPS estimate, -27 cents per share. Revenue estimate, $10.96 to $11 billion, a decline year-over-year. That's a sharp drop from prior year Q1, $0.70 EPS, a significant base effect. Some analysts expect Nike to more or less be in line. Others see modest upside in revenue from strong core franchises. But there are real downside risks. Margin compression. If Nike has to lean hard on promotions or discounting, gross margin might deteriorate further. Tariff escalation or input cost surprises. Negative guidance. Nike's management might pull forward cautious commentary, given the uncertain consumer backdrop. Weak performance in Asia or international markets, especially given macro volatility. If Nike reports a weak top line and signals soft future guidance, that could spark a sharp move down. But what surprises could flip this? Let's talk catalysts and red flags. Catalysts, red flags and key metrics. As a trader, you want to zero in on what can move sentiment and price fast. Here are the catalytic levers and metric thresholds I'll be watching. 1. Gross margin and margin drivers. If Nike holds or minimally compresses GM, that's a win. Watch discount, promotional spend commentary, channel mix, and inventory reserves. 2. Revenue segmentation. Direct versus wholesale growth, decline. Nike's direct business is costlier but offers full margins. In Q4 it declined approximately 14%. Nike investors performance sports versus lifestyle, classic franchises. If performance, running, basketball categories, shows strength, it gives narrative power. 3. Forward guidance tone and walkthroughs. If Nike signals backward guidance or cautious forward outlook, markets will punish. If they highlight tailwinds, Skims uptake, inventory cleanups, marquee product cycles, World Cup leverage, that could anchor a better relative reaction. 4. Inventory levels and write-downs. If leftover inventory is high or needing markdown reserves, that's a warning sign. 5. Geographical strength or weakness. Outperformance in emerging, international markets or Asia would surprise to the upside. 6. Capital return, buybacks, dividends. Nike tends to be shareholder-friendly, dividends, buybacks. If they indicate raising share repurchases, that could be an underpin. Red flags: flat or negative margin bridging commentary, weak uptake commentary on NikeSkims, negative FX or tariff commentary, pullback in core performance product lines. If one or more of the positive catalysts surprises, you could see a strong upside move. Conversely, dovish tone plus margin warning equals downside hammer time. Okay, so with all that, what are the trade setups I'll be watching? Trade setups and risk frameworks. Here's where traders should keep an eye. These setups are opportunistic, lean but tactical. A earnings straddle, volatility play, implied move expectations are baked in. Ahead of earnings, implied volatility will be expensive. After the release, IV crush is likely. You could trade an earnings straddle or long straddle near the close. But be careful, implied move might overshoot or undershoot. Alternatively, skewed plays. If you believe upside surprise, consider call spreads. Be post-earnings momentum play. After the results come out, monitor for swings. If Nike gaps and holds, there's momentum to ride. Use relative strength to S&P or to athletic, retail peers. See event-based breakdown pre-earnings, Nike might consolidate in a tight range. A strong breakout, on good earnings, can become your entry. On a weak print, breakdown below support zones may generate a short or put play. D-catalyst overlay trades. If Nike mentions Skims traction or World Cup leverage as upside drivers, you might lean into that narrative. Long into apparel, cross-retail plays. Be mindful of peers in the athletic retail space. If Nike's narrative is strong, others may ride tailwinds. Risk framework rules: position size small heading into earnings, don't bet the farm. Use stop or hedged structures, e.g. spreads. Keep liquidity in mind. Nike has good volume, but option liquidity around earnings can be tricky. Watch after hours, pre-market gaps carefully. They can overshoot. Let's walk through 3 hypothetical scenarios and price action expectations. Scenario walkthroughs and expected reactions. Let's map 3 possible outcomes and how traders might respond. Scenario 1, clean beat plus upbeat guidance. Imagine Nike reports EPS of 32 cents on revenue of $11.2 billion, margin holds, and guidance is modestly improved. Expect a strong gap up next day, possibly 8 to 12%. If it holds and volume backs it, momentum continuation is likely. In that case, long setups or rollover trades on pullbacks could work. Scenario 2, in line or modest beat, cautious tone. Suppose EPS around 27 cents, 0.29, revenue flat or slightly down, margin softness, and some cautious forward commentary. Market might price in mixed reaction, initial pop, then fade. Could lead to a choppy day, double tops, or range-bound trade. Best tactic: watch initial 30 minutes, see reaction channel, and play within range or fade extremes. Scenario 3, miss plus negative guidance. EPS below 25 cents, revenue significantly weak, negative commentary on forward outlook. Expect a heavy gap down, possibly double digits. Panic selling could accelerate. If it breaks support, short or puts may be your fast way to profit. But be cautious of overshoot reversals. Price reaction amplification. Remember, implied volatility is high pre-earnings. After results, IV crush can exaggerate moves. A solid surprise in either direction might get amplified. Watch zones: pre-earnings range high, low-key technical support, e.g. 200-day, prior pivot, volume confirmation zones. Let's wrap up with a quick checklist, then closing thoughts. Earnings checklist, tips and closing. Here's a quick checklist I'll have in front of me just before, during, and after the earnings release. Did EPS beat or miss relative to consensus? Revenue split, direct versus wholesale trends, margin bridges and AMP, commentary, costs, promotions, tariffs, Tone on guidance, forward outlook inventory levels, write-downs, slow-moving goods mentions of NikeSkims, product cycles, flagship franchises segment strength by geography capital return, buybacks, dividends, Qs. Market reaction and volume strength, gap, continuation, reversal, a few bonus tactical tips. Watch closely the first 5 to 15 minutes after release, it often sets the tone. If reaction is weak, don't chase, wait for retest zones. Use smaller sized bets into earnings and scale in, out. Keep alert to correlated retail, apparel peer moves. In sum, Nike's September 30th release is a high-stakes inflection test. The company is at a pivot point. If they deliver execution and confidence, it could spark follow-through. If not, the downside may be swift. From a trading lens, this is a classic earnings battleground, high implied volatility, potential for big moves, and narrative swings. Stay nimble, manage your risk, and be ready to act. Alright, that's the setup. I'll be live on earnings day with post-report commentary. Smash that like button if you found this useful, subscribe for the live trade coverage, and drop your estimates or what you'll be watching in the comments. Good luck, trade smart, and I'll catch you in the next one.